if we're not, 4 chapters ahead on tests, we're, testing something that was 4 weeks ago. And it just doesn't work.
Okay, Mark, what's today's date?
13th.
All right, 11/13. Thursday be 11/15, won't it?
Yeah.
All right, and next week, I guess add 7 on the 13 and 7 on the 15, and you got 11, 20, and 22, don't you? Well, now that is Thanksgiving, right?
Yeah.
Okay, when we get back, we're going to have 11 what?
29. All right.
Is that right? 29, 31? Got a map, Kayla? It's Tuesday, Thursday, 11/29 and 11/31.
27th and 29th.
Yeah, the 27th and 29th.
Yeah, 27, 29, I'm sorry.
Well, we were close. All right, the next class meetings are 12 what? What is the first Tuesday next week? Is it 12/4?
Yeah, that's what it is.
All right, is that when exams start?
Yeah.
So we've got 2 days and 2 more. We've only got 4 more days of class. It went by fast, hadn't it? All right, and we've got 2 more days of class. If everybody's enrolled in that class comes the next 2 days, that will be their total attendance, 2 days. We got a couple in here that's never come to class simply because they're full online and they're keeping up to date. But the rest of the class is not full online. And they're not here today. I think attendance does help. And hopefully, if you've been in attendance, you'll make a C or better, hopefully. If we got 4 test grades in here, and if somebody made a 92 on the first test, Kayla, I'm going to use you as an example. What'd you make on the first test?
I think 108.
Okay. Second test
85.
and third test.
I don't know yet. I wasn't here Wednesday.
Oh, you weren't here? Yeah, and Adam wasn't here when we went over it. Okay. We'll do that at the end of class, okay? So hang around a few minutes. All right. But let's just say, for example, Kayla, let's say she made a 71, okay? We're going to drop that one anyway. All right. Now, what does 85, her known grades, what does 85 and 108 add up to? How much?
193.
Now, out of 300 points, 400 points, I'm dropping 1 grade, that leaves 300. 90% of 300 is how much?
270.
All right. Now, Kayla, if you take 270, subtract 193, if I'm subtracting right, she needs a 77 on the exam for an A in the class. So you can bill yourself on the first test a pretty good situation like Kayla has, or you can bill a bad situation like others have. Now, those who come maybe 2 or 3 times a semester, I don't know how good their grades are. They can grade them with me just like I do anybody else's. So for any other student. And anyhow, it's just a proven fact. If you don't come to class, you don't do as well. Now, I believe in live streaming because there's a couple students out there that couldn't get it any other way. They turn in summaries every day. They come and take their test. But I don't believe if a student don't have a B average, I don't think they should be able to live stream or do an online class, Blackboard, Moodle, or anything. And if they don't live further than 50 miles away, I think they should be in class. So, but times have changed and we have to roll with the flow. You take Mr. Imel's teaching for Liberty University. What do they have? About 120,000 students? And about 80, 90, 100,000 are online. A lot of students, isn't it? And Phoenix University, you see the advertisement, and they've got a lot of students online. So you can get anything online now, just about. I guess if you want to be a preacher, you can get a certificate online. All right. So forth. So, but online degrees in some classes, it's okay. But you don't get to interact with students in class. Now, we've got 4 days left, so we've got a heck of a lot to do. Now, I told you, I thought we were ahead. Now I feel like we're behind when I looked at we've got 4 days left. All right, so to give you the wrap up of what we're going to cover the rest of this semester. Now, we covered through chapter 9, the flexible budgets. Now, we got to cover 10 for this exam. And hopefully we can do a lot of finishing touches to chapter 10 today. You will have chapter 12 on the exam. And you will have chapter 14 on the exam. Let me make sure of that. Not chapter 12, chapter 15. Okay. But now, Monica, you're in intermediate accounting, right?
Yeah.
And why I'm picking on Monica, are you in finance? Is anybody else in finance? Kayla, you've had intermediate accounting?
Yes.
All right. These next 2 chapters, they went over and over and over. Now, all of you have had principles accounting, right, Mark? So you've done cash flow and you've done ratios. That's what the next 2 chapters are. But now Monica's done them all twice. She's done cash flow twice and ratios twice. And so has Kayla. They did it in principles, then they did it in intermediate. Now all of you are going to get these next 2 chapters again. I don't care what you're majoring in, you're going to take finance, right? You're going to have a chapter on cash flow with Dr. Sneed and a chapter on ratios with Dr. Sneed. So these next 2 chapters we're going to cover are those 2 chapters. Learn them now and you'll make Dr. Sneed happy. Okay? But all of you have to take finance. And that's the next 2 chapters. So what I'm trying to tell you, even though it sounds like we don't have a lot of time, but material will be familiar to you. Okay? Now, let's go work on chapter 10, see what we can do with it today. Now, folks, this last test, I think, is probably one of your easiest tests, simply because it's on ratios, cash flow, and standard costing. Okay, in chapter 10, I probably gave you some assignments. And we need to try to look a little bit at 11 today, if possible. I mean, the next chapter.
14.
All right. But what problems did I give you today, Kayla?
1 through 5.
Exercise?
Yes.
These little exercises on material variances and those start on page what, 490?
472.
Well, I'm way ahead then, aren't I? 472. All right, I'm not going to worry about exercise. No, the connect problem. I'm not going to worry about the foundation problem. Let's see. Okay, I do want you to do that foundation problem. That'll wrap up the whole chapter. The foundation problem on page 472. Come in, Georgie. Mark, I don't believe Clayton has been here for a couple class meetings, has he? Clayton started off faithful. He's ending up unfaithful. Hightower started off unfaithful. Now she's ending up faithful. All right. All right. Anyway, exercise 1. According to the standard cost card, each helmet should require 1.6 kilograms of plastic at a cost of $8. What is the standard quantity of kilograms of plastic that is allowed to make 35,000 helmets? Now, there, you take 35,000 helmets. How much materials does it take for each helmet?
0.6.
Just 0.6? All right, all you got to do is multiply, and you end up with how much?
21,000.
All right, that'd be standard, right? And sometimes you may have to find standard. Giorgio, did you win your track meet?
My teammate did. I did.
Who was your teammate?
German guy, exchange student,
Okay.
Theo.
Yeah, I know it was that author. I asked the author.
Arthur didn't win too.
Yeah,
Where's too slow?
your teammate. What country?
My teammate? Oh, France?
Now,
France
author's
and
from
Germany.
France.
Yeah, and the other one is from Germany.
Is he the one that won?
No, there was another German guy, Theo. He won it.
Okay. Well, I guess Germany is faster than Georgia and Paris, France.
Yeah, I guess, yeah.
In that case, okay.
Yeah.
All right. What is the standard materials cost allowed, standard times standard, to make 35,000 helmets? What's your answer to part 2?
168,000.
All right. Now it says, what is the standard material cost? All right. Now let's go with the format. Now, the format that your book is using is what? Standard times standard?
Yeah.
And actual times actual. Now, that standard, which one's first? The units? I think the units is first and the price is second. Is that correct? All right. Now, in the middle here, is it standard times actual?
Actual times standard.
I was wondering about that when I would have known when I started putting down the dollar amounts. All right. But here, number 2, what is the standard material cost to make 35,000 helmets? All right. Now that's just something on the side here. We've got to buy how many? The standard material was 21,000. How much we pay a unit for that?
$8.
How much?
$8.
$8. So that'd be how much?
168,000.
All right. So now we could take, now that was standard price too, right? Was that standard price?
Yes.
All right, so we could take 21,000 units times 8, and you're answering that first question, 168,000, okay? All right, now what is the material spending variance? Okay, we got to take what was the actual, wait a minute.
Okay,
What was the actual units, materials used?
71,000,
What?
under 71,000, so what you're talking about, the actual cost.
I don't know. They give it to you right here.
the actual quantity was 35,000.
I know. But how many did you buy? All right, let's just try to fill in this diagram that I have. What was the actual materials we used? Did it give it to you or not? All right. Has anybody got an answer to the spending variance? Kayla, do you have an answer to number 3?
3,000.
All right. You see, we got a spending variance here. All right, now Kayla, how did you get that 3,000?
171,000 is subtracted 168,000.
Now that's all you had to do, but I want to fill in everything, okay, if I can. All right. Now, is that favorable or unfavorable?
Unfavorable.
All right, Mark, why is it unfavorable? We were supposed to use 168 or spend, but we spent 171, didn't we?
Yeah, we spent it.
All right, so we can answer that 3,000 without filling this in if they gave you the 171, which they did. And what is the materials price variance and the materials quantity variance? Okay. All right. Now that spending variance was the whole amount, wasn't it? Now, 171, was that the amount actually spent?
Yes,
The plastic cost the company 171. That's actual times actual. So I was up a notch 2.4. Now this variance between S and S and A is 3,000. Unfavorable. Now somewhere in between here, we got to get figures that gives us that 3,000 again. Now, what is the materials price variance? What did we actually end up paying for materials? $8, $8.20, what?
$8.
How much? Somebody divide 171,000 by 22,500. Divide 22,500 into 171. What do you get? How much?
7.6.
$7.60.
Yes.
All right. No, wait a minute. Actual? Well, wait a minute. 760 here. I'm off this morning somehow. Trying to set this up. Get a price variance, we have to have the difference between $8 and $7.60. That's 40 cents, isn't it? All right, but multiply this out. Multiply 21 times 760. Let's see what we got.
59.6.
Wow, what a difference. If I take this, what is the difference between 159.6 and 168? Is it going to be 84? Difference right here. Is that going to be 84? All right, now give me the difference right here. Give me the difference between 159.6 and 171. What's that going to be, 11 or 10?
11.4.
All right. Now, what's the total difference? It does work, don't it? I wanted 3 to the left. I wanted 3 difference here. So right now, I know I'm okay on every number here. If you get the price variance and the quantity variance, the difference is 3,000 spending variance, isn't it? I'm okay on that. But now, did we have actual? Was the actual quantity 22 what?
Right.
And the actual price was? Adam, we had that reversed. All right, we had that reversed. Okay, and the actual was 760. Now multiply 760 times 22.5 and see if you get 171.
Yes.
All right. Oh, I am saying it. If you remember this format, you can set about any of these problems up, okay? All right. Any question on exercise 1? Okay, now that was on materials. Let's do a labor variance on exercise 2. Okay. Now we can do the same thing here, folks. When in doubt, just set them up. Now, your exam may be a lot of multiple choice, but if it is, you'll still have to work problems to even answer a multiple choice, what have you. So starting out with this labor, what is the standard labor hours allowed? $10 to, what is the standard labor hours allowed to prepare 4,000 meals? All right. How much time are we going to spend on 4,000 meals?
25.25.
125.
Yes.
All right, that's 1,000.
Yep.
All right, 1,000 something, 1,000 hours. All right, and we know one thing then. We know the units is 1,000 hours, don't we? Right? But we can start filling in wherever we can or work it without filling these in if we want to. Okay, how about B part? What is the standard labor cost allowed? Standard hours times the standard rate to prepare 4,000 meals. Standard hours times the standard rate. Okay, what is the standard rate? What is the standard rate? All right. I've got a bid of 1975. How'd you come about 1975? I don't know. I'll look at it. Okay. It is. Yeah, it's given. All right. Now, what is 1975 times 1,000?
19,007.
Now, did that answer our question? What is the standard labor cost allowed? So we answered that question, didn't we? Okay, now the next question. What is the labor spending variance? Well, we got to go down here and know this figure right here. what did they actually spend on labor? Did they tell you? All right, now when you take the difference between those two, you got a spending variance of how much? How much?
550.
Is that favorable or unfavorable? Favorable. Right. If the standard is 19,750, you got it done for 19,200, that's favorable, isn't it? So we're filling in labor here just like we did for materials. All right. Now the next question, what is the spending variance? Now we need to know what the actual rate was. Now, you spent 19,200, didn't you? How many hours did you spend? What rate did you pay? You see, I got to fill in one of these blanks right here. You have to fill in one to fill in the third one.
960 labor hours.
960. That's actual. We had to fill in one of these. We can fill in the rate now. We can fill in the rate. What's 1960 divided into 19,200? 20 even. All right. Now we've got this actual rate of 20 even. So that's $20,000. Now we've got the numbers we need. The difference between these two is 250, isn't it? And the difference between these two is 800. And the difference between 800 and 250 is 550 favorable. So this has to be 800 favorable and 250 unfavorable. Okay? 250 up here is unfavorable. So did we answer the questions now? What is the labor spending variance? 250. No, wait a minute. Sorry, that's 550. 550. Okay, what is the labor rate variance? Now the rate variance, you can see a rate is 1975 and 20. A rate variance is going to be the 250. That's going to be unfavorable because it's 25 cents more. Now the efficiency variance is 800. We only took 960 hours and not 1,000. Okay? We may have paid a quarter more, but we got it done quicker, didn't we? Maybe we hired experienced helpers or something. Okay, so that was Sky Chief prepares a flight meal for members of major airlines. And these meals are prepared for major airlines. If you've ever flown, you know what they prepare. Georgia, you've had some long trips, haven't you, on airlines?
Long trips, maybe delayed.
How long does it take you to fly home?
Well, pure flight or like including.
Well, your longest part of that flight is how many hours?
Close to 24.
So you had other stopover, but you're on a plane 24 hours straight. That feeds you some pretty good meals then, don't it?
It depends. Like I fly from here to New York. They gave me a snack, pretzels. And
Right.
then from New York, I fly, let's say Poland or Qatar or Ukraine, whatever. They give us food. Depends on an airline. 2 or 3 times. If it's a Ukrainian airline, they give us only once. If it's Qatar, they give us 3 times. So it depends.
Don't it? So Ukraine's a little more tight.
Yeah.
That's where plate gut is from. All right. But it sounds like you can travel pretty free to any of those countries near
Yeah,
you.
yeah, you can travel for it.
Okay. But different airlines have different food. Okay. All right. My daughter, when she was an auditor for one of the big six, she audited one of the food companies, Eagle Snacks or something, that they make meals for the airlines. And she got to audit Anheuser-Busch too. So, all right. Those are variances for materials and those are variances for labor. The only other problem you're going to have with variance is if you read it correct, that you may have to find how much they actually spend. Or you may have to find by working backwards how many hours they actually put into it, or how many units they actually put into it, or the cost. That's the only difference in any of these problems. No matter how they word them, you come up with these three variances for materials and labor. So you'll get a chance to practice some of those, but we got to move on. Now we're going to move on to number three. Number three. Now, this is the last variances in the book. But now, before we move on to number three, I want you to look over at a certain page in your book. We've covered materials, we've covered labor. So I want you to go to page 462. Now on page 462, you can set up, now they do it a little different than I do in the book, but you can set everything up just like I did right here. But now they start off with actual times actual, and they start off with actual times actual. They got it reversed to what I do. But it works the same way. If you take your actual times your actual and your actual times standard, you're going to get a variable overhead. You're going to, from the difference, you're going to get a spending variance, but you're going to get a variable overhead rate variance, and you're going to get an efficiency variance. So now we're looking for a rate and efficiency variances. Before, we were looking for material price and quantity variance. We were looking for labor rate and efficiency variance. So now we're looking for rate and efficiency variance here. So model after page 462, and you'll get these variances. But I'm going to save the overhead variances until Thursday to cover, okay? But it's an easy chapter, folks. Now, Thursday, I want you to, that one problem I asked you to do, what was it? All the variances, the foundation problem. All right, I won't go over the foundation problem. However, now you should have done the first 5 exercises today, correct? So we'll cover that overhead variance on Thursday and working backwards to find labor variances. Now these first 5 exercises are real good for the whole chapter. All right. For Thursday, though, probably do exercise 10-8, 10-8, and 10-9. That'd be your only 2 problems for Thursday, 10-8 and 10-9. All right. Now, due to time, we're going to go on today and look at, we'll finish chapter 9 Thursday. But today we're going to look at another chapter and try to get a little bit started on it. And that will be the chapter on 14, and 15. Now, chapter 14 is cash flow, page 686. If you would turn your books there, page 686.
Final exam would be on 3 chapters or 4 chapters?
3. But Georgie, you've had intermediate. Have you had cost accounting? You have, haven't you? I don't know if cash flow was in cost or not, but it was in. Have you had finance? You've had your finance, haven't you? And he's had an intermediate. So Giorgio has had cash flow 3 times. He had it in principles, he had it in intermediate, and he had it in finance. Did you ever learn it?
Hope so.
He did. A cash flow statement is your fourth official accounting statement. You've had a balance sheet, you've had an income statement, and you've had an owner's equity statement. That's 3 official. When you got the corporations, the owner's equity section switched to a retained earnings statement. All right, but a cash flow is the fourth official. Okay, and I guess that's why they put it in so many courses. They didn't used to push it up to about 15 years ago, and they started pushing the cash flow statement. All right, now on a cash flow statement, I want you to look at page 687. All right, first off, let me see if I can find my PowerPoint on this. I don't know. I don't believe I have it on this disk. It probably has to be in Moodle. No, it has to be in Moodle. But I'll probably forego the PowerPoint today, okay? I'll just forego it. Okay, on page 687, you've got 3 activities in a cash flow statement. Operating is where your normal money comes from. That's why you're in business. That's what you're in business to make a profit is. So we got operating. All right, investing is what you do with the money you make. You're buying land or equipment or building. You could actually invest in stocks and bonds, but your fixed assets are an investment. Okay, and then you've got financing. Where do you get your money from? All right, if you were to start a small business today, where do you get your money from? You had to save it probably, or you might get a bank loan. That's how you finance. But a corporation finance, they can borrow money, long-term notes payable, or bonds. And they can sell stock, can't they? And they pay a dividend, they repurchase their own stock. So look at these activities on page 687. Now, we have 2 methods, a direct method and an indirect method. We'll look at both, but we'll stick with one, which I'll tell you which one later. All right, we're going to go over real quick and look at a balance sheet on page 695. We'll go back to the front of the book in a minute. Now look at your balance sheet for 2 years. Your cash and your cash difference is how much? From the beginning of the balance to your ending balance, how much is your difference in your cash? Page 695. How much is the difference in cash? How much, Mark?
62.
All right. Now look at those three figures, Mark. What are they across there? 91 and what?
29.
91, 29, and 65. That's your answers on a cash flow statement. That will be your last three numbers on your cash flow statement. So you've always got a check figure because you've got to have a balance sheet. So let's flip a page and see if I'm correct. Flip 2 pages. All right, go over to page 699. Mark, look at those last three figures on that statement of cash flow. Is that correct? So you always have check figures. Keep that in mind first. Now, going back to page 695, look at accounts receivable. What is the difference there in accounts receivable, Adam?
17.
It's minus 17 from beginning to end. Now, do you think we collected more cash or less cash by having a minus 17 there?
4.
At the end of the period, it was 586. No, wait a minute. At the end of the period, it's 637. At the beginning of the period, it's 654. Now, Adam said more, and he's right.
Okay.
A decrease in accounts receivable is more. It's more cash. It's a plus. I know it says a minus here. So let's go over and look at page 699. A decrease in accounts receivable is a plus. So here's what we have. Now we're only talking about current assets and current liabilities. So a decrease in asset, now we're talking about current assets, a decrease in a current asset. Now accounts receivable went down, didn't it? That means we collected more cash. So that is going to be a plus or source. A plus or source of funds. Now, an increase in accounts receivable or any other current asset is going to be a minus or a use of funds. Now, reverse of that is true for current liabilities. A decrease is a minus or a use, and an increase is a plus or a source. All right, now, keeping those in mind, go back to page 695. All right, inventory. Monique, let me pick on you. Inventory. Look at inventory on page 695. Is that a plus or a minus or source or a use? Is that a source of funds or a use of funds? All right. Now, inventory did what? What happened to inventory? Did it go up or down from the beginning to the end? What?
Increased.
All right. Now, if we tie up money in inventory, that's got to be a what?
Use.
Okay, we tied up money in inventory. Okay, analyze any one of these looking at it the same way. All right. Now, Giorgio, go down to accounts payable. What happened there? Increase. Now, when accounts payable increases, we're borrowing money from somebody, our suppliers. If they give us credit, that's same, they're giving us money. That's a source of money to buy those, the inventory, whatever we're buying. Okay. All right, so an increase in accounts payable or notes payable or any of that is a source. Okay, but let's take net income. That's the balance sheet. We don't have the income. Yeah, we got the income statement over here on page 694. All right, we made $140. Now, if we were a cash method taxpayer, we made $140. And we spent, that's our cash flow right there. Because our net income would be cash. Our expenses would have been paid in cash. Our revenue would have been taken in cash. So there's no need to do a cash flow statement for a cash basis taxpayer. But now you as individuals know where your cash comes from, don't you? Some of you work. I know Mark does. Some of you run for it, like Georgia does. He runs for his money across country and plays tennis. Okay? Kayla works full time, don't you, Kayla? You work 40 hours a week?
I'm part-time.
Okay. But you know where you get your money from. You work for it, you get it on scholarships, or you get it on grants, you get it on student loans, your parents give it to you, and there's probably not one person in here that your parents pays 100% of your tuition. Am I wrong? Does anybody have parents that pay 100% of your tuition? So you're helping yourself somehow or another. Okay. All right. Now, those who never come to class, those who fail every test, their parents are probably paying 100% of their tuition. Possibly, I don't know. I just throw these things out. If they watch this video, they can come and question me about it. All right, so you know where your money comes from, and you know where your money goes. Tuition, books, gas, food, whatever. Your basic necessities. Did you, in psychology, what did you find out what your basic necessities were? Your basic needs, not necessities, basic needs.
Shelter, food.
Food, clothing, shelter. Now, I always say those three are your basics, but I think since some of those psychology books were written, they should have added on transportation. I think transportation is pretty much a basic need now, along with food, clothing, shelter. But you know where your money goes, okay? All right. Now, income is a source we start off with on this cash flow statement. Okay. Now look at page 699. We start off with net income. That's a source. All right. But now what is the first thing that we adjust that net income for? What's the first thing?
Depreciation.
How much was depreciation, Georgia?
103.
That is the shortest cash flow statement you ever seen. Net income plus depreciation. Cash flow is $243. With nothing else being equal, that's what cash flow is. But now, why would I add back depreciation? We took it out to get net income. Why would we add back depreciation?
What is non-cash deduction?
All right. No money goes out for depreciation or amortization or depletion. No money goes out for those three. Okay. Now, let's look at investing activities on page 699. Additions to property, plant, and equipment. We bought some stuff. Proceeds from the sale of the store. $8. Now, look back up under operating. We had gain on the sale of the store. How much?
-3.
How much?
-3.
Does that mean we had a loss? No, we had a gain. All right. If we had a gain of $3, why are we subtracting it? Why are we subtracting a gain of $3? It's already added into the $8 proceeds. It's already added in it. It's already added into that $140. It's already added into that $8 proceeds. We got to take it out. Out of these 2 times, we got to take it out once. Now, a loss we'd add back a plus. Remember, a loss we'll add back a plus. A gain we'll subtract. Now go down and look at your financing. You have retirement of bonds payable. You had to pay out money. We sold common stock. We got in money. We paid dividends. We paid out money. All right? And that's the last thing you do. You got 3 categories, and your last 3 numbers, 62, 29, and 91, is the answers, which is your first line, cash. So that's cash flow. Now, if you turn back, go back to page 693. You should read this blue box, exhibit 14-4. Key concept 1, 2, and 3, and 4. They give you another list of these activities. Okay, so we can cover cash flow pretty easy. And what we'll do with cash flow, we'll work to a 3. It'll be a review for some of you. It may be new for some of you. Now, I want you to turn to page 710. Exercise 1. Take a minute and answer those. All you got to do is beside each one of them or jot down on a piece of paper, operating, financing, investing, operating, financing, or investing activities, or maybe none of the above. All right, put an OFI or N, OFI or N beside A through M. Cody, did you see your grade on your test? What? Anybody else do it? I know you're Kayla Cox. I just looked at the word Kayla. Now, Kayla, I'm glad you know who you are. I thought I had two Kaylas in here. George, you didn't see your test either. Okay, I gotta go over test with 2 or 3 people, so let's move on this. For homework, do exercise 4 and problem 7 or whatever it is. There's 2 cash flow statements. They are both the indirect method. And we'll look at the appendix on the direct method, but on the exam, we'll stick to the indirect method. 4 and 7, homework, read this chapter. But now, worry about chapter 10 first. Worry about standard cost, any of those problems first. All right, now here real quick, Cody, collecting cash from customers. What method would that be? All right, number 1 is operating. All right, Mark, number 2, paid cash to repurchase its own stock.
Investment.
Huh?
Investment. It's not
Financing. Adam, number C, borrowed money from a creditor.
Is that financing?
If it's long-term, it is. If it's a long-term note, it is. Now, if it were short-term, it's just a current liability and it'd be operating. So we'll take financing. Kayla, how about number C, D?
Operating.
All right, paid suppliers for inventory, sure, operate. And how about E, Ms. Hightower?
Financing.
Repaid the principal amount of a debt is what? All right, if it says the principal amount, it's probably a long-term note, probably financing. Again, it could be current if it said short-term. Okay, Baynard, how about F? Paid interest to lenders. All right, now that's a tricky one. And it's not been covered in the book. But paying interest goes under operating. So remember that one. You may never see it mentioned, but paying interest goes under operating. All right. Paid a cash dividend to stockholders, Georgie.
Financing.
That's definitely under financing. And Monique, How about, we sold some common stock? Definitely financing. So some of these are 100% for sure. And how about, let's see, we have, how about loan money to another entity? We loan money to anybody,
Investing.
probably will be invested. Okay, J, paid taxes to the government,
Operating.
definitely. Paid wages and salaries to employees,
Operating.
all right? Purchase equipment with cash,
Investing.
it is. And then paid bills, I guess, to what? Insurance and utility providers?
Operating.
Definitely. All right. So some of those are 100% for sure, some are not. You're dismissed unless you want to see your test. Giorgio, you made a 95. You can leave too. I'm going to use your paper to go